Right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Alix Steel. We're counting you down to the closing bell. And here to help take us beyond the bell, it's a global simulcast. We're joined right now by Massar and Tim Stenovec in our radio booth. Scarlet Fu on assignment right now, but we welcome all of our audiences across all of our platforms here on the final trading day of the month, Carol, and It is not a pretty one.
No, we saw some selling, right, in the last few minutes of trading. What it was good, though, is to be a cannabis stock. I'm going to talk about it a little bit later in my gainers, but nonetheless, it looks like the DEA is going to reclassify those drugs. So talk about stocks flying high today versus what we saw in the overall market.
Yeah, as you mentioned, we're seeing a little bit of selling just across the different indices. But Amazon down 2.6% going into earnings, which are expected in the next couple of minutes, Alex. And of course, we're going to bring you those numbers as soon as we get them.
Yep. And the age-old question, is this the start of a deeper correction, or is this just a normal kind of sell-off and there'll be a buy the dip tomorrow morning if Amazon numbers wind up coming in strong? It's been the question that's been plaguing us for the last couple of weeks.
Yeah, and I think, though, too, talking with a lot of people, they really start to talk about how those pairwise correlations that you see within these indexes have really kind of broken down. So even if you do get a big number out of Amazon, is that going to be a rising tide lifts all boats, or just a rising tide that just lifts Amazon?
You look at the S&P 500, almost 450 names to the downside, 445 to be exact, 56 actually gaining ground. So you're seeing it's pretty broad-based selling that we are seeing, and kind of the turnoff, and a lot of it had to do with the earlier economic news this morning, Romaine.
Yeah, and that economic news, it really wasn't good. And you talk about home prices continuing to go up, consumer confidence going down, and then, of course, that employment cost index that everybody is obsessing about here. It shows you that, if you think the Fed is heading into that meeting today and talking about rate cuts, you got another thing coming. All right, let's walk you through the numbers here before those earnings hit red across the screen here on this last trading day of the month. The Dow Jones Industrial Average lower on the day by about 1.5%, and that's going to lead to a 5% decline for the month of April. The S&P 500 lower by 80 points, or also by about 1.6%, down 4.2% on the month. The NASDAQ Composite down 2% on the day, about 4.4% on the month. And let's go to the Russell 2000. That is your primary laggard here, down 2% on the day. And for the month of April, a 7% decline. And just to put a finer point on this, Russell 2000 wiping out all of its gains for the year.
All right, guys, earnings already crossing, and this has to do with Caesars Entertainment. First quarter net revenue coming in at $2.74 billion. The company also reporting a first quarter loss per share of 73 cents. So we're seeing this one, same store net revenue to an important metric for the first quarter, missing the average analyst estimate. We're seeing shares of Caesar just unchanged a little bit. The stock's down about 21% so far this year, but investors kind of maybe waiting for a little bit more context around those earnings.
All right, Amazon earnings now crossing the wire here. Net sales in the most recent quarter coming in at about $143.3 billion. That's a slight beat. The street was looking for 142.6, so not a major beat here, but indeed they did come in above expectations. First quarter EPS, 98 cents. The street was looking for 83 cents, so a beat there. Let's get you to the forecast right now. The company is saying that for the second quarter, it projects net sales to be $144 billion to $149 billion. The street was looking for $150. So a miss on that should that guidance come true. Operating income for the second quarter guiding to $10 to $14 billion. The street looking for $12.6 billion, guys.
I just want to point out AWS, so Amazon Web Services net sales, if you back out FX, coming up 17%. The estimate was for 14.5%. The rumors on the street was anything 15, slightly plus, was already priced in, but 17 does feel like a more solid beat there for AWS.
Getting some commentary from Andy Jassy about AWS, President and CEO of Amazon, of course, a history at AWS. He says the combination of companies renewing their infrastructure modernization efforts and the appeal of AWS's AI capabilities is reaccelerating AWS's growth rate, now at a $100 billion annual revenue run rate. Also talking about the stores business continuing to expand selection.
Yeah, looking at first quarter operating margin, they did well, 10.7%. The estimate on the street was 7.63%, right? So key in terms of their ability to operate efficiently, if you will, and profitably. But it's interesting. And now you've got shares of Amazon, which have been kind of initially trending lower, now up about 4.9, almost 5% here, more than 5% here in the aftermarket, guys. guys.
Yeah, there's a lot of talk in here. Of course, they go through all of their units, but a lot of talk, a lot of attention devoted to Prime, and particularly with the streaming business here. Some of the content that they're saying that they're going to add to that, and of course, some of the money, the ad revenue they expect to get off that as well. Kind of interesting, too, that when you look at some of the other businesses and the commentary about the retail side of it here, they do talk about trying to diversify the product lines out there, particularly with some of these Amazon brands, which, of course, don't actually say Amazon on them, but they're effectively the brands that they themselves are shepherding to that marketplace.
Yeah, and you know what they talked about a lot on the press release? AI. It talked about how generative AI is being used by all its customers in many different kind of ways. And to your point, Tim, as you were saying, that it was the combination of an infrastructure modernization effort and AI capabilities that have really helped AWS and provide that growth rate of $100 billion annual revenue run rate for AWS.
Is that why investors are excited in the after hours? They changed their mind after these numbers came out. Maybe net sales coming in a bit light, but then if you look more closely, you see AWS net sales excluding Forex up 17% when estimates were for only 14.5%. Maybe that's what has investors excited.
You know, it's also interesting. I did a quick search for buyback or dividend, and that's not coming up in the press release. And I think
So
there was
it's
some
just
speculation.
Tesla and Amazon now without those, right?
Yeah, I think there was some hope, some speculation of whether or not that they would join the crowd that we've seen among the other Magnificent Seven, but not the case, guys.
Yeah, well, they certainly have the cash to do it if they do actually decide to go there here. And again, you get to this idea of why the shares are rallying, and maybe it is that cash generation. You're talking about operating cash flow in the most recent quarter.
Yeah.
You saw this?
Yes.
And you're basically talking $100 billion that they're pumping out here.
82%.
And that's an 82% jump on a year-over-year basis. Now, we should point out, seasonally, you do kind of see some of these numbers go up, particularly in that first quarter here, but that's still phenomenal. We should also point out, this is 1, 2, 3, 4. This is basically the fourth straight quarter that we've seen that cash flow growth in that range, 74%, 81, 82, 82%. Those are your numbers you're looking at.
I was also looking at any capital investment, CapEx, to see if that's growing, and that's what you're kind of going to do with all their cash. And I haven't gotten a real clear read on that. The one that they really talk about is a planned $10 billion investment into a data center in Mississippi.
All right, I'm looking at shares of Starbucks right now in the after hours because the company just out with earnings, shares down by 5.9%. Let's go to the numbers as we speak. Second quarter adjusted earnings per share coming in way below estimates at 68 cents. Estimates were for 80 cents per share. Second quarter comp sales down 4%. Estimates were for a gain of 1.46%. So we're seeing miss on both of those things. Shares now down, 7.4%.
Yeah, I'm just trying to look a little bit for international comp transactions. Down
I know,
a bit.
It's really bad.
Yeah, okay, go. China comp sales down 11%. The estimate was for a decline of 1.6%. So that is certainly a big disappointment. And we know that there's been pushback not only in China, but also some of their other operations, certainly around the world.
I mean, overall, international, as you point out, Carol, was down by 6%. And it's partly because of its transactions and the average ticket, so people going less and they're also buying less. I'm trying to get a read on, say, Middle East, for example. We saw McDonald's get hit by that, and that's not broken out in their release right now.
All right, I want to make a quick pivot here. We are getting some other earnings. Of course, one of the AI darlings, Super Microcomputer, those shares, they have tripled so far this year. They're up about 7% in after hours trading after the company said that adjusted EPS did come in above estimates. The company also giving a forecast for the quarter, basically saying that it sees 4Q adjusted EPS at 762 to 842. The street was looking for 697. So even the low end of that range would be a pretty big beat. A similar story for the range that they're giving for numbers for sales, saying net sales in the most recent quarter, 5.1 billion to 5.5 billion. The street on average was looking for 4.7 billion. So a pretty big beat there. And maybe that answers some questions here about whether all those folks who are front running this sort of AI boom here, whether that was justified, and at least based on just those couple of numbers I read you, at least on the surface, it looks like they were right.
Well, speaking of beats, let's look at Pinterest because shares of Pinterest are up by more than 20% right now. First quarter adjusted earnings per share beat estimates. First quarter revenue coming in above estimates at $740 million versus estimates of $700 million. First quarter adjusted EPS also came in above estimates by 6 cents. And then first quarter loss per share was 4 cents.
All right, folks, let's go back to certainly the big one here, the behemoth, if you will, in the aftermarket. And Amazon, again, a lot of it has to do with the outlook. Second quarter net sales, 144 to 149 billion. The estimate was 150.21. But I'm looking at Amazon still up about 4.9% in the aftermarket. And so investors, at least initially, definitely liking what they got from the company. We'll see what kind of commentary and further color, if you will, around the business and AI and all that good stuff around Amazon as they start to take the call. All right, guys, a wrap. Earnings continues. Our cross-platform radio, TV, YouTube, Bloomberg Originals, Beyond the Bell. We will see you again, same time, same place tomorrow.